So hi all, welcome to Business Life channel, a channel purely made for share market and for new business ideas. So today we want to discuss about the fundamentally strong stocks, or do you really have to invest in fundamentally strong companies, or it doesn't matter in share market. So first thing is, what is fundamentally strong stocks? So when people say fundamentally strong stocks, what do they really mean? So as an investor, which stocks you should invest, or fundamentally strong stocks, or a stock which is making a huge news and people are earning a huge money? The question is, does it really matter that we invest only in fundamentally strong companies, or should we go with the flow of the good news, how the market is responding, how we can make quickly money? So share market is all about making money, so why don't we follow the crowd, and who is making good money, let's follow them. So why go behind these fundamentally strong companies? So that would be the biggest question mark on all the investors. So I want to give you little details of why you have to focus on fundamentally strong companies, how it makes difference in your share market experience, and how you can be safer. So getting into advantage and disadvantage of fundamentally strong companies. The biggest advantage is you will not have a sleepless night if you're putting in a very good stock. Even though, imagine if the market crashes, you have a hopes that after certain years, after 2 or 3 years, that market can always bounce back and you would get your money back. So what is fundamentally strong companies, and how do you define this fundamentally strong stocks? It's just that if these companies can sail through difficult times, imagine now we have a COVID situation, and imagine a lot of companies are closing down. So these fundamentally strong companies will have very less debt. They will have a lot of plans for future. They will have a good cash flow. They will not be having trouble in paying for the people, paying for the vendor. So they will, as they are debt-free companies, when the difficult times comes, they will not have a lot of things to be panicked about. So the companies which has a huge debt, because they're already in a huge debt, maybe they're making a huge lot of crores in as a profit or returns, but the moment such bad time comes in, the crisis comes in, that those companies go through a major loss, which leads to shutting down the business. So your investment may be at risk. So that is the biggest point, that is the biggest difference of fundamentally strong and fundamentally non-strong stocks. So by choosing fundamentally strong stocks, that is the biggest advantage, that you are on a safer side. Even if you invest your savings, after 5 years you don't have to be panicked. After 5 years you can see the returns will be high. You will not lose your money. The similar way, if you have invested thinking that you will make a huge money on companies which is not fundamentally strong, you never know, anything can happen. The company can shut down, you can lose your money. A lot of panic is involved. So that's the reason, as an investor, what you need to look is a long-term goal, not for, I would not say for 10 years or 20 years, at least for 3 to 5 years. If my stock is safe, if my money is safe, and I do not put more risk into my investment. So those are the stock you need to focus. So that is the advantage of fundamentally strong stocks. So if you ask me what is the disadvantage, so imagine you're investing in stocks which are fundamentally strong, that has its own pace of increase, or that has its own phase of growth. Suddenly you would see a lot of multi-bagger stocks coming in. So those value of 5 rupees share going to 100, 200, 300. If you see Ruchi Soya, now it was from 5 rupees, it's now in 1500. You would not see such growth in fundamentally strong companies. Even in Alok, a lot of any multi-bagger stocks, you would not see the similar fashion in the fundamentally strong companies, but your investment is definitely safe. So as an investor, what you need your investment safe, plus you get a good return is what is required. Then you go for a fundamentally strong companies. But if you ask me, in share market, we all are in here for making money. So when so many people are making money with multi-bagger stocks, shouldn't I invest in multi-bagger stocks? If you ask that question, is 100% right, but what you have to do is you need to decide what is the quantity you need to invest in those kind of stocks, which can become it's like a make or break kind of stocks. You can definitely invest that, but in a small quantities. So there is no harm people investing in Ruchi Soya or Alok Industry. So but you need to decide when to buy and how much to buy is a big question. So if you ask me now, you would have seen the current scenarios of Ruchi Soya. The people who bought when it was less than 100 or when it was trending in 200, they would not have a much pressure at the moment, but at the moment it is in a lower limit. So now if you see now, there is no buyer, there is only seller for Ruchi Soya. It's touched its peak, it's almost touched 1400. Now people who have the share of Ruchi Soya started feeling a little pressure. People who bought at early stage, they are fine, they are happy that they made huge money, but now they want to sell it and they are unable to sell it. Now you never know when the lower limit will break and people start buying the shares. So that is what I'm talking about. You can make a good money, but you need to plan how much to buy and when to buy and when to sell. These are the stocks you need to play around in your portfolio, not to keep for long term. The moment the people who smartly invested, if you see the lot of retail people who bought Ruchi Soya, if you just check the rate, they've sold it the moment it crossed 1000. They did not keep it for long. But there are a lot of investors, people who are seeing it crossing 1004, 1005. Then they started buying more, thinking that it will go about 2000 and make huge money. That is where people go wrong. So these kind of multi-bag stocks, you need to be very careful of when to buy, how much to buy, and when to sell. The when to sell is a very important point in these particular stock. The people who sold at 1000 plus, they made a huge profit and they're happy. The people waited to see more. So people who waited to see it grow more, maybe right now in pressure. So that is the difference. Right now, if you see in Alok, I would not say similar, it's just touched 50, so long way to go. So when you see if you've received some certain profit, you need to sell and exit from those stocks. Those are short-term games that you play in share market, and which we are talking about the fundamentally strong is purely for a long term. As a long-term goal, you can have a good returns in a long term. It's like a safe investment. So if you ask me how do we plan keeping fundamentally strong stocks, its best thing to do is to plan and manage your portfolio to have at least 50-60% of fundamentally strong companies, which you can put it for a long investment like 3 to 5 years or more if you want. So and rest of the 40% of the portfolio you can play around with small cap and mid-range cap or some multi-bagger stocks. If something comes into news, you invest that, buy, sell immediately, sell in short term and make good money. So that 40% of your portfolio you can easily keep to play around with stocks and make good money in share market. But I would say the majority of your money, what you invest in stock market, should be on a safer side, because out of thousands of companies, you can only see two or three companies which are doing great in multi-bagger, like Ruchi Soya did, Alok is doing, and there are hardly any other companies. There are a lot of upper circuit companies, but we don't have any hope that it's going to touch like Ruchi Soya or Alok, it's going to perform. We have no idea. So if you end up putting a lot of investment in shareholders or share market, you'll be trapped. I think you would have got news circulating that some investor had committed suicide after he lost crores of money. That is what we've been always putting cautious for all the investors. You can invest the money, do not invest all your capital in share market. Even fundamentally strong companies can fall. That's another disadvantage. If you ask me, it can fall, but it will again rise back. When the time comes in, it will again rise back. But still, put carefully, whatever the investment you're going to invest in share market, you should not put all your capital. You should only put a certain percentage from your capital investment. Do not invest all your money saving, selling, borrowing and putting in a share market. That's the wrong thing. So you can see a lot of people getting into pressure. So best advice would be is manage your portfolio rightly and keep it very well balanced. At least 50 to 60% keep fundamentally strong stocks, and remaining 30 to 40% you can play around with small caps, and you can play around with stocks which is making a news. So that's all guys, we just wanted to do a short video for people to choose the stock rightly and balance the portfolio well. So That's all guys, that's all for today. Do like and comment and do subscribe if you like our videos. Thank you so much and have a wonderful day.